Okay, everyone, welcome to Business Basics Friday. I am Safi Russell, CEO and founder of SDR Consulting, Inc. And Facebook wouldn't let me go live today, so we're just going to go ahead and record this. But I want to welcome you to Business Basics Friday, a little bit about Business Basics Friday. The goal is to provide content of value to small business owners every Friday around 12 o'clock Eastern Time. A little background about myself. I've been in the industry about 19 years, and I'm a CPA and enrolled agent, and I am based in New York, Long Island area. However, I have a virtual practice, so we do work with clients all over. And we mostly work with small business owners, helping them from business formation all the way through to tax preparation and all that fun stuff in between. So that's a bit about myself. And today we're going to be covering the topic of tax preparation for 2021. It's now November 19th, 2021. And this is going to be the business edition. So for business owners, whether you be a sole proprietor or a corporation, doesn't matter. So I'm going to actually share a few slides. And if you are viewing this recorded version, you'll be able to see the slides, but I'm still going to walk through everything we're covering today. And then there will be an open Q&A session at the end. So if you do have questions, feel free to post them or list them here in Clubhouse. All right, so hopefully you can see my screen and all that. So just so you know, a quick, disclosure, this is really just, informational. This is not official legal advice. You want to consult with an attorney for that. And definitely this is more for educational purposes. Your specific situation may require consult with a professional such as CPA or enrolled agent. So today I'm going to cover deadlines because, we don't want to miss them and they are coming up sooner than we know it. The first deadline I want to talk about is estimated taxes. So when you're in business for yourself, it's ideal that you pay taxes quarterly throughout the year, assuming you are profitable. Most businesses are going to pass through to your individual account. And so the tax estimates are generally paid at your personal level, and they factor in everything you have going on for the year. So your business income, if you're still working, the deductions that you may have access to, all that's a factor in determining your estimated tax liability. And if you expect that tax liability to be more than $1,000, generally the IRS and the states would want you to pay that tax in quarterly throughout the year, or you could be penalized when you file in April and pay the tax at that time. So for the year 2021, the last estimated payment is due January 15, 2022. So if you haven't made estimates all year round, ideally you could still make one for Q4. You could be penalized for the other quarters, but you could definitely minimize some of those penalties by making that Q4 estimated payment. Now, if you're not sure how to make that estimated payment or what you should pay in, it really stems from knowing your numbers. So we'll kind of talk about some reminders year end related to that. So Q4, January 15, 2022. Now this deadline list is not all inclusive. I'm just highlighting a few things that are pertinent to business owners. So but you may have other deadlines that are applicable to you. The next deadline I want to go over is January 31st. Now, if you're in business and you have service providers that help you in your business, whether they be subcontractors or your IT person or even your accountant, these are people you potentially would need to issue a 1099 NEC form to because they're technically contractors in terms of the IRS view. They're getting paid for a service and they're not an employee. So by default, they're a contractor. Whenever you're paying a contractor over $600 in a year, so from January to December of 2021, if you paid anyone over $600 and they are not a corporation, so they could be an individual, they could be an LLC, depending on how they're taxed, they could be a partnership, those type of entities and individuals may require that 1099 to be issued to them, or you as a business owner can be penalized for late filing or no filing of those information returns. So in order to file those forms, you would need to have information from your contractor. So you would collect a W-9 form, which should give you most of the information you would need: their name, their address, and their tax ID, whether it be an EIN or a social security number. That's going to be important because you can only do the filing with that information. A copy of the filing goes to the IRS, some states, and it goes to the individual as well. So the best practice is to collect those W-9s up front. before you even start to, pay people. That way you make sure you get it. You just collect it from all your service providers. But right now, if you haven't, definitely want to get them now so that you can properly meet that requirement, because that form has to be issued and filed by January 31st. And you need to know now, who's potentially in line for those forms and who to get those W-9s from. So you're not scrambling in January. Also, if you're paying that person through PayPal or another merchant service provider, for example, they send you an invoice and you pay with your credit card or debit card. In most cases, you don't need to issue a 1099 to those people, because those merchant services have another 1099 form that they need to issue if they cross over a certain threshold. So a couple of factors that need to be looked at, but the first step is just get that W-9 to be safe. Then we can definitely help you if you need assistance with determining if you need to do that filing. If you have employees, January 31st is also the due date to issue W-2s and file Q4 payroll tax returns. So when you have official employees on board, there's quarterly payroll returns that are filed, and then annual forms such as W-2s and the Form 940 that are due by January 31st. So hopefully you have a payroll service who's helping you with that, but you want to be sure you understand that requirement so you know that you can meet that deadline. If your entity is structured where you have an entity such as an LLC or a corporation that has made an S election for tax purposes, you're considered an S corporation. S corporations have a March 15th deadline. It's a month before your individual filing. So make sure you understand what type of entity you have, what elections you may have had, so that you can make sure to file a timely return. The penalties for late filings for S corporations and partnerships is steep. It's over $200 per person, up to a year. So definitely don't want to miss that. If you're a partnership, either a multi-member LLC or another general partnership, that also has a March 15th deadline. So that comes sooner than you know it, right after holiday season, January, February, and boom, we're into March. So definitely want to make sure you're aware of that. Now, if you're just an individual filer, and let's say you are a sole proprietor, meaning you're just in business for yourself under your own name, or if you have an LLC and you're the only member, then your deadline is your normal individual tax deadline of April 15th, provided that it's not extended again this year, as it has been the last 2 years. Also, if you have a corporation that has not made an S election, you are a C Corp, and that also has an April 15th deadline. So just a highlight overview of some of the main deadlines that may be applicable to you, and starting as early as January 15th and the end of January. So it's really important you start getting all your numbers and things and paperwork together now. So I'm just going to go over a few reminders. If you're in business, you should have a bookkeeping system. I'm just going to be honest. The system should be automated. It should be, an online platform. We at our firm use QuickBooks Online. However, as long as you have something that works. If it's an Excel-based or manual in a book method, there's just so much room for error, and most likely you're not keeping up to date with those records. So if I could say anything before the year is out, if you don't have a bookkeeping system in place already, please get one. You can get free ones out there, which I don't recommend, but $10, $20 a month is worth the investment. The only way you're going to know if you need to pay estimates, the only way you're going to know who needs a 1099 is if you have good record keeping. So that's important. Mileage tracking, if you do use your car for business, or if you have a business vehicle, in either case, it's really important that you've been tracking miles. And if you haven't, you can go back and create that mileage log now, so that you're not scrambling during tax season or possibly missing out on deductions because you don't want to take the time to do it at that time. Even though we're getting into holiday season, it's an ideal time to do these admin tasks if you haven't been doing them all year round. Mileage tracking can be so simplified if you just get an app on your phone that can track miles for you. And then you just have to go in and tell the system if it's personal or business. So if you haven't been doing that, implement it right away and then go back and start tracking back to January. If you have a dedicated space in your home that you only conduct business in regularly throughout the year, you may be eligible for the home office deduction. So it's a good idea, if that's the case, to start tracking those expenses now. So that you're not in, April 10th, trying to figure out what your expenses for 2021 were. Home office You can deduct certain things such as utilities, if you own, mortgage interest, real estate taxes, if you rent, your rent, certain repairs that may be applicable to the whole home based on the square footage of your business space. You may have a separate office, a whole room, or you may just have a corner of a room. Whatever the square footage of that space is compared to your whole home, whether it's 10%, 20%, 30%, you can take a deduction, a valid deduction from those expenses that I mentioned. So it's ideal to do those measurements now, take pictures of the space for your own records, and start tracking those expenses now. Some year-end strategies, if you are looking to reduce taxes, maybe there's some true expenses that you need to incur that you can purchase now by December 31st instead of January 10th. So if you have some upcoming expenses, if you're able to prepay certain things and not exceed a year of prepayment, these are things you can do to accelerate your expenses into 2021 and lower your taxes. If you know those things are coming up. You don't want to just go out and do frivolous spending just to lower your taxes, because that just doesn't make sense. But there may be some valid expenses you're going to incur, and you might as well do it now. If you have the ability to defer income, that's also another strategy to reduce taxes at year end. You may have control over invoicing and when clients pay you, and maybe maybe you'll invoice them December 31st, so you're paid in January as opposed to December 15th. So if that's applicable or doable for your business, that's a strategy to help minimize taxes. Final reminder, if you have an S corporation, meaning that you're an LLC or corporation electing to be taxed as an S corp, and you are on payroll as the owner, there are certain ways you can deduct your medical health insurance premiums. But if you have an S corp, there's a certain way it has to be done to get that benefit. So long story short, your W-2 needs to reflect your medical premiums, assuming you're eligible. These would be premiums that are not with another employer. These are, maybe you went to the marketplace and got your own insurance. With an S corporation, you can actually benefit from that deduction on your taxes, but it needs to be reported properly on your W-2, which means it needs to be reported to your payroll provider now or by year end, so it's reflected on that W-2. Lastly, for S corporations and also regular corporations, if you have an accountable plan that allows your business to reimburse you as the employee for expenses incurred on behalf of the business, you need to have an accountable plan, and you want to do those reimbursements by December 31st. For example, if you have an S corp and you work from a home office, your S corporation can reimburse you for your home office, but that reimbursement should be submitted to the company appropriately where it can be tracked and paid out by December 31st, so you can get the benefit this tax year. And as long as it's done properly, that is not considered income to you personally. All right. And there's one other thing that came to mind as far as year end, and it's not here on the slide, but retirement planning. If you are in business for yourself and you are profitable, there are ways that you can contribute to a retirement plan for yourself and minimize your taxes. Some of those plans have to be set up and paid into by December 31st. Others can be paid in by April 15th. So definitely, those are just some, friendly reminders year end. If you're looking to get more tax tips such as these and ask questions, definitely want to connect with us in our Facebook group, SDR's Tax Tips, which you can find on our main page, SDR Consulting Inc. And at SDR Consulting is our handle. All right, so I'm going to open it up for any questions. Feel free, if you have questions, to put them here in Clubhouse, or feel free to comment on this thread once it is posted, because I know we're not live today. And also, just as a way to contact me, my number is 516-255-6603. Feel free to call and schedule a 15-minute complimentary introductory call so we can get more familiarized with one another and find out if it's a good fit. And then if there are services that we can provide to you, we will definitely make arrangements to get you a quote. So social media wise, you can find us on the links here or at SDR Consulting as mentioned. All right, so I'm going to go ahead and wrap up if there's no questions. Double check. Okay, great. So everyone, We're heading into holiday season. Have a great holiday. Happy Thanksgiving. We will not be live next Friday, day after Thanksgiving. Please enjoy that time with your family and stay safe. And I want to thank you for joining us and see us back in December on that first Friday, 12 o'clock Eastern for Business Basics Friday. So once again, Safi Russell, CEO and founder of SDR Consulting, Inc. We help business owners from business formation all the way to tax preparation. And I look forward to hearing from you. Take care. Bye-bye.